Here, back to make another video about FEPI, F-E-P-Y. Now FEPI is one of the ReX shares funds, and they are another covered call strategy. And I covered them way back when in the beginning when they first launched, but now that they've been around about 3 to 4 months, I figured I'd revisit them. Now that I know a little more about them and they've been established for a little bit, I'll give them a better review of what I think of them. So before I start off, I want to go right into the prospectus. So if you want to locate the prospectus on the website, you just go under FEPI materials and there's a button right here for prospectus. So obviously you would click that, it would open a file. But for me, I always like to save it as a file in my phone. And then obviously, I can highlight the important things that I deem necessary. So again, for this video, obviously I'll go through the prospectus and then obviously I'll get more into the website and then some other information. But if you're looking for the prospectus that I have, I'll put it on my Discord, FYI. So here it is. This prospectus is dated September 1st, 2023, and it was amended on the 25th of 2023. I haven't seen anything new pop up, any new prospectus, so this is it. This is the one, as far as I know. So again, it's FEPI, it's a ReX shares ETF, covered call ETF. So I'll go through this and then I'll go through a lot of other things. So stay tuned, here we go. And this, I thought right off the bat, their investment objective is capital appreciation and current income. I like how capital appreciation is mentioned first. So maybe they have a little more focus on that versus some of them, other ones we're used to. Because as an income investor, you don't necessarily need capital appreciation, but it's nice to have, right? If your capital is maintained or goes up, then your yield on cost will typically go up. So always keep that in mind. Management fee is a respectable 0.65%. We're used to seeing around 0.99% lately with covered call ETFs. If you look at, sorry, I need a sip of water. If you look at funds like YieldMax and Defiance, they charge 0.99%. FEPI charges less, so that's a plus. Obviously, ReX Advisors is the advisor. They are a pretty new company. The company, basically, it's comprised of the FANG Innovation Index. The fund uses a covered call strategy to provide income and exposure to share price returns. The fund contracts provide exposure to share price returns, just said that, and current income from options premium. So in summary, what this fund does, it buys the stocks that are in the FANG Innovation Index. You heard me right. It buys the stocks. It does not do a synthetic position. It actually owns the positions. And then they sell covered calls on these positions to make income from the options premium. So what do they own? Well, they own 15 tech stocks, and there's 8 core, and then I'll say 7, which could be whatever, right, that meet their criteria. But the 8 core are Apple, Amazon, Meta, Facebook, Google or Alphabet, Microsoft, Netflix, Nvidia, and Tesla. So the 8 core, obviously the recognizable large cap tech companies domiciled in the US, and then 7 non-core. The funds will be reconstituted quarterly according to the trading volumes. It says the index will be rebalanced monthly and reconstitutes quarterly. So what I read that as, it'll be rebalanced monthly to make sure it's equally weighted for each of the funds, and then reconstitute. To me, I'm thinking, all right, if they actually have to replace a fund with another fund, they would do it then. Again, it says they're equally weighted. They create long exposure to the index by purchasing the stocks. We know that's equally weighting, blah, blah, blah. You'll notice when you read prospectus, man, a lot of it's repetitive. So I apologize if I'm covering some of the items that were repetitive. Yeah, the advisor believes that an equal weighting allows for a more diversified portfolio. Oh, thank you, advisor. They write call options that are slightly out of the money. I don't know what slightly means to them, but hopefully it's a respectable percentage. They allow for some capital appreciation. All right, I'll take some. The degree to which the fund's written call options will be out of the money when written will depend on market conditions at the time. To me, this just tells me, all right, they actually think before they do things, right? They're not just selling covered calls a certain percentage like a robot, right? They actually look at the market. Where is the market trending? What's the IV of these stocks? What are we doing? So hopefully that's what they do. Target written call options that are not. The fund intends to target written call options that are not at or in the money. This means they pick a strike that is above the current price of the stock, which is what we want. We don't want them selling calls at the money. Certainly not in the money. Okay. More. So they trade on the Flex exchange, flexible exchange options. It allows for customizable terms such as the strike price can be negotiated. I always find that interesting. This is all about risk. All about risk. I'm not saying you shouldn't read it. I just don't want to. This says an erosion risk due to distributions. Yes, we know. We know when they pay a distribution, it will drop. Okay? I just highlighted this so you guys know. When they pay us a distribution each month, the fund will drop by that distribution amount, plus or minus, movement in the underlyings, of course. But, that happens on X dividend date. Most of you guys know that, but I just wanted to cover that. Just important note, the fund may invest in flex options issued and guaranteed for settlement by the Options Clearing Corporation or the OCC. The fund bears the risk that the OCC will be unable or unwilling to perform its obligation under the flex options contracts. That sounds like some BS to me, but I don't know. I figured I'd at least highlight it. It's kind of sketchy. Lots of scrolling, so if you're getting dizzy, I'm sorry. Trust me, you don't want me reading 48 pages. We'll be here forever. ReX Advisors LLC is the advisor, and Vidin Asset Management is the sub-advisor. The fund, people always ask, how do they get more funds? Well, each fund, they have blocks, right? So they have to, the fund will issue shares to certain institutional investors, typically market makers or other broker-dealers, only in large blocks of at least 25,000 shares known as creation units. So every time they need more shares for, I guess, a broker or whatever, market maker, they'll give a creation unit, which could be up to 25,000 shares. You know what's funny? I made this video before. I was 15 minutes in. The damn phone rang, and the video just shut off. So I'm now in airplane mode. I'm also in silent mode, so there should be no interruption. Hopefully I could finish this video without interruption. Anyway, so hopefully it still comes out good. ReX FANG and Innovation Equity Premium Income ETF, by the way, that's the name. Investment objective are capital appreciation and current income. Yeah, I covered that. But I wanted to mention because the investment objective may be changed by the Board of Trustees. Okay. They have to give us 60 days written notice as the shareholders. I'm not a shareholder yet, but I will be. Okay. Here's some information about the flexible options exchange. These are customized options contracts that trade on the exchange but provide investors with the ability to customize key contract terms like strike price, style, whatever that means, and expiration date while achieving price discovery in competitive, transparent auction markets and avoiding the counterparty exposure of the over-the-counter options positions. So for those of you who are interested in Flex, that's some info. There could be no assurance that the fund will achieve its respective investment objective. There better be. Better make us some money, pay us some good money. Oh man, reading really sucks. Wow. They talk about risk a lot to cover their butts. But, so if you guys want to read that, feel free to check out the prospectus I'll put it on my Discord, like I said. The investment advisor is ReX Advisors. They are located in Connecticut. They are a Delaware limited liability company, and they were organized in 2023. Very new company, less than a year old. The sub-advisor is Vidin Asset Management. The sub-advisor is also organized as a Delaware limited liability company, and their principal office is in Georgia. They were established, however, in 2016, so they have a little more experience. And actually, the funds are managed by them. And here's their team. Ryan Duffelmeyer, he has 16 years of trading and portfolio management experience across various asset classes, including both ETF and mutual funds. All right, Ryan. Ryan Duffelmeyer holds a bachelor's from the University of Virginia and a master's from University of Maryland. Well, show off, why don't you? Austin Wen, as a CFA, has 8 years of investment management experience. Mr. Wen obtained his bachelor's in finance from the University of Georgia and holds a chartered financial analyst designation. Cool. They sound qualified to me. What about you guys? Bunch of nerds. Just kidding. Just kidding. Be careful with our money. All right, still scrolling. 42. We're getting there. We are getting to the very end. I'm sure you guys are happy. Oh my God. Where are we? We're done. We are done. All right. I'm going to go back to the website. So, now here we are. So we went to the prospectus. Again, the prospectus is very important. That is the document. Obviously, the website is also very important. So let's cover that. FEPI objective, own big tech, okay. Plus covered calls, okay. Equals high income potential. Yes, we like. There's also a fact sheet, which this is kind of like the detailed version of it. As of 12, okay, this looks like it was updated 12/22. That's okay. Distribution rate 25%. That's what we like to see, right? What else we got? Some of their top holdings, which again, I'll get into the holdings. And I'll get into how they did as a fund. All right, so that's the fact sheet. Again, we went through prospectus, discount premium chart. I guess that compares the NAV to the current price. But really, who gives a crap? 19A1 notice. This is the document that shows how much they paid on return of capital. So if you look, the January payment is 100% return on capital. The December payment is 100% return of capital. And the November payment is 100% return of capital. So all three payments so far to date are return of capital. So some of you may be like, oh my God, how? I don't want them to pay me my own money. I do not want that. But it's very, very interesting because I'll get into it when I get to my Excel spreadsheet. But in summary, it looks to me that they're doing it pretty creatively because the fund is making money, right? Your capital is going up, which I'll show you. So they sell covered calls, right? So when they sell calls and they have a strike price, they, in the Flex exchange, they won't be assigned, right? They can do a cash settlement. So the cash settlement from the difference in the actual price versus the strike would then be considered a loss, right? They can mark that as a loss. But even though when they sold that call, the underlying price was lower than the call, you capture that capital appreciation. So let's say you had a stock, $100, and then they sold a call for $110. If that stock went to $120 by expiration, you would capture $10 of that capital appreciation, and then they would capture $10 as a loss. So what are they doing with that loss? It looks like they're using the loss and netting it against the actual income in order to pay this out as a return of capital. So you are not only getting capital appreciation, but you're getting income that is return of capital that you don't have to pay tax on. It's pretty freaking amazing. And I'll try to look at this, visually on Excel spreadsheet, but this is what I believe they are doing. And again, before we get any further, I am not a financial advisor, nor do I want to be one. This is just for fun and entertainment. I'm just telling you what I think, which is not much, right? Ain't much thinking in this head. So again, the ticker is FEPI. This is just the website. Their NAV is 56.90. The closing price 56.98. The fund asset size 54 million, pretty big. Shares outstanding 950,000. So it does look like they're doing 50,000 creation units. Number of holdings 80. That includes like the options though. Expense ratio 0.65%. Distribution rate 25%. Man, oh man, they are good. Here are their distributions. I'll cover that in the Excel as well. Here are all their holdings. I'll cover that in the Excel as well. But yeah, you could see their largest holding is Palo Alto Networks. I don't know if I'm just living under a rock, but I don't even know who they are. I got to look them up, actually. But everyone else, obviously, we know who they are. Broadcom, Apple, Intel, Netflix, Meta, blah, 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 blah. So you can view the holdings via Excel, CSV, or PDF. Although if you hit CSV on the phone, it just comes up as an HTML, as another link. If you want to get the latest distribution information, you should submit your email address. And I love the name, by the way, ReX Share. It's pretty damn cool. By the way, they did reach out to me when I made my first video, and they offered to send me some merch. And I finally got a t-shirt from them. Although it's a size large and it's a little tight, hopefully they'll send me an XL, but I am very appreciative. You would think YieldMax would reach out and provide me some free merch, but they don't. Messed up, right? Messed up. But ReX Shares, thank you very much if you are watching this. It's greatly appreciated. All right, so now we're going to get into my Excel spreadsheet. Let's get into the fund. So let's go to FEPI. No connection. All right, whatever. Hopefully because I'm on airplane mode. The formula's still going to work. Current price. Yeah, okay. All right, so that works. So here we go. Let's look at the dividends first. So they've had 3 distributions. 1 paid in November, 1 paid in December, 1 paid in January. They have 2 more that are scheduled for February and March. Obviously, they'll come out with the new ones after that. First distribution, $1.15. Second one was $1.18. Third one was $1.20. So after the first, they had an increase 2.61%, and then the next one increased 1.69%. The fact that it's going up, very, very good. However, the return of capital was 100% on all 3. So some may view that as a negative, and some may view that as a smart positive, a good thing. Because look at this. All right, so the fund launched way back. Where are we at here? October 11th, 51.69 it looks like. And then if you look at the movement, okay, 50, 49, it went down, 52, 53. I did the gray as ex-dividend date, but it looks like it's not even lining up. I don't see the big drop. I think the ex-dividend date is reflecting on the 25th, which is row 47, $1.05. And then you scroll down, it's at 55, 56. Next ex-dividend date looks like the 23rd. All right, but regardless, here we are. It launched at 51.69. Not today. What's today? I'm making this video on the 25th, but for some reason the last update was the 23rd. But as of the January 23rd, the price of FEPI is $56.98. So that is capital appreciation from inception, $5.29. Okay? And now, to date, they paid, actually, I'm including, I don't think they paid the latest. Go to dividends. Yeah, payment date is, well, did they dock it 123? It's right there. Where's the ex-dividend date drop? Whatever, I'm including it. Screw it. So capital appreciation alone, 529. Dividends paid out, including January, will be 353. I am showing a return of 882 per share. That's a 17% total return. Are you freaking kidding me? What a dominant fund this is. All right, so now the holdings. Here are the holdings. Here's the export. I threw it on my Excel. Keep in mind, this is as of January 22nd, though, okay? So they own AMD, Apple, Broadcom, NVIDIA, Meta, Salesforce, Palo, Micron, Alphabet, Netflix, Microsoft, Amazon, Intel, Adobe, Tesla. And then some cash, okay? Down below, you'll see some other holdings. These are the calls. So they have Adobe call, Tesla call, I have all these different calls in blue, okay? Which when you read that, sure, you're like, what? What are they doing? So luckily for you, I did the work. So here's the calls. So they did an Adobe call, 610 call. Oh, I don't have to have the damn expiration date. Oh, all of them expire February 16th. That's right. That's easy. All of them, keep that in mind, expire February 16th. That's about less than a month away. So like the Adobe, for example, they have a call, 610 call. Current price of Adobe is $626.18. That's 2.58% in the money. So yikes. So they're going to cash settle that most likely. Again, this is my opinion. They'll cash settle it. They'll keep their Adobe shares, and that'll be marked as a loss. And then if you look at Tesla, they have a 250 call. Tesla's current price today is 186. Keep in mind, they just had earnings and they missed. So it's tanking today. But that call is 34% out of the money. So that call is going to expire worthless. That premium they made, 100% profit. Boom. Salesforce, which is ticker CRM. I didn't even know that. Their call is 290. Their current price is 278. That's 3.96% out of the money. Okay. Could be in danger, but it's okay. NVIDIA. Damn, man. NVIDIA is nuts. 570 call. Look where it is. 623.35. That's 8.56% in the money. So all the negatives are in the money. All the positives are out of the money. So in green, if you look, Teslas are out of the money. Palo, they're in trouble. They're 9% in the money. Netflix is 6% in the money. Broadcom, 10% in the money. AMD, 17% in the money. NVIDIA, 13% in the money. Palo, 12% in the money. AMD, 15% in the money. Tesla's saving them, 23% out of the money. And then AMD, 9% in the money. But the average is 2.9% in the money. That's not bad, considering. So, what does this tell me? This tells me they're probably not selling calls far enough out of the money, okay? Granted, I don't know what the stock price was for all of these prior to the, when they executed it. I will do my best and try to track this as we approach the expiration date of February 16th. I'm assuming they're going to let it go until February 16th, but I will try to do my best and see what date they made the new trades so I can then lock in the current price of the ticker to see how far out of the money they actually sold, right, at the time. Because I'm curious to know how far out they're going to. So my next video on FEPI, hopefully I'll cover that. I got to remind myself. If any of you are tracking that information, you have it, please share if you want. You don't have to, obviously. So yeah, they're selling, they're buried. But again, these negatives, they're going to settle them. And they can mark it as a loss. And the more they mark as a loss, the more they could pay us out return of capital. Okay? So I'm okay with that. I really am. Now, so that's, what I covered before on the left. That makes up their net assets, $40.6 million. outstanding shares, 725,000. Again, this was as January 22nd. So their NAV is at 5605. So this fund, the price obviously is a little higher than what you're used to, but that's okay. They're paying a respectable yield. So again, their covered call strategy is a little different, but they own really good companies. Some I'm not as familiar with, but most of them I am. And Tesla has volatility. Some of these Amazon has decent volatility. So I like it. It's a very good fund. I am very impressed with the capital appreciation, the distribution payment, and the fact that they can pay it out return of capital. However, you have to understand, when they pay out return of capital, your taxable cost basis per share will decrease. So eventually, if they continue to pay return of capital, your cost basis, I'll call it taxable cost basis in quotes, this is not tax advice, can become zero. And when that day comes and they're still issuing return of capital, you will then have to pay tax on their distributions. How will it be taxed? I don't know. Could be ordinary income, could be capital gains tax, but who knows? So in the end, the moral of the story is FEPI, in my opinion, this is my opinion only, is a solid investment. It's a solid investment in the short term, and it looks like a great long-term solution for providing income, especially for people that are retired. Like, this is an awesome fund. It's like perfectly in the middle. It's a 25% yield, right? So you look at like YieldMax, okay, they pay 40, 50%, higher risk, okay. And then you look at SCHD, they pay 3%, okay. They basically, you call that almost no risk, right? But then right in the middle, 25% yield, you got the best of both worlds, man. You got a high yield and you got capital appreciation. So this is like a really, really good fund. And I am sorry, in the beginning, I didn't buy in. I'm like, what? First of all, I think I saw like return of capital, and that's when I was like completely negative. Because I always think individual stocks. I didn't come from an ETF world. I was always against ETFs. Why? Because I had the time myself to do the research on individual companies, and pick and choose. But now I'm at the point, I no longer have that luxury. I no longer have that time. So I have to trust the ETF fund managers to do what they need to do, especially covered call strategies. You kidding me? I got no time to do options. And again, I want to see like at the time they do the options, how they do, how far out of the money. So again, that's to be determined. But right now, you see a lot of them are underwater, so they may not have gone far enough out of the money, but they're probably just trying to get you the most premium. And it's brand new fund managers. Maybe not the sub-advisor, but you know what I mean. So yeah, that's my review. I hope you guys enjoyed it. I really do. If you did, please click that like button. If you want to help the channel, if you like my content, then please just click the like. A bonus, something else you could do is share the video, right? In like the high dividend yield groups or whatever, right? And that's it. Outside of that, that's it. If you have questions, leave in the comments, of course. If you want this prospectus that I had up, obviously you can join my Discord. There's a link under my YouTube. And yes, of course, it's free. We don't charge for anything. I don't believe in that crap. I'm sorry, I don't. Information is free. For me, how I'm going to get paid, YouTube can pay me, right? They can pay me part of their ads. I'm now part of that whole thing, the partnership thing. So I get, money from YouTube, and that's it. I'm not going to charge people money for my content. That makes no sense. Who am I to charge people money? I'm a scrub making YouTube videos, and I'm going to charge people for my videos? No. YouTube, ad money, that's enough for me. Again, I work full time. I don't need to do this. But obviously it's a bonus. It's become somewhat of a part-time job for me. I do daily videos on Tesla and Coney. And obviously I do periodic videos of reviews on certain funds. That being said, if you guys have any other funds that you want me to review, please check if I reviewed it already though. Let me know in the comments section, or join my Discord and leave it in the channel called YouTube Suggestions. Actually, I would prefer it be there because then I can keep track. But yeah, and then I'll take a look. If it's a respectable yield, if it fits the objective, then I'll do it. But anyway, I hope you guys enjoyed this video. I hope ReX Shares comes out with more funds, because this one, you know, after further review, is a very impressive fund. So good job, ReX Shares. And let me know what you guys think of FEPI. Do you own FEPI? If you do, how you doing? Do you enjoy it? If you don't, why not? What are you waiting for? I'm curious, everyone's thoughts, all right? Anyway, I gotta go. I'm on my lunch break. I'm gonna post this now, see how it goes, and then we'll go from there. Have a great rest of your day. Later.